Hello, everyone. Welcome back to another Troy LinkedIn Live special stream. My name is Nate Cross. I'm the digital content specialist here at Troy. I want to thank everyone for joining today. We're ending the year on a high note with more additions to this live stream series to keep you guys engaged, informed, and excited about what to look forward to in the new year. So, welcome back. If you've seen other ones of these, if you're new here, what we do is we talk to experts here at Troy, the different initiatives and solutions that we're innovating, and also to educate people about trends in fraud, document security, banking, and more. Today, I'm very excited because we're talking to Troy's Vice President of Sales and Marketing, Ari Mellon. Ari, how you doing today?
I'm great, Nate. Thanks for asking. How you doing?
I'm doing great.
Good.
Thank you so much for joining and taking the time to talk to me today. I wanted to talk a little bit about because we haven't gotten a chance to talk about your trip to the American Bankers Association conference in New York this past fall. I wanted to talk a little bit about that with you because we haven't gotten a chance to hear your side of what you've learned, who you've talked to, what insights you may have. So my first question is, what trends in banking do you foresee shaping in the industry over the next 1 to 2 years, specifically with traditional consumer banking?
It's a great question, Nate. So there were two conferences that were held in the same week in New York City. There was American Banker, just to make sure that I'm speaking correctly. So there was American Banker, and then there was the American Banking Association, so ABA. So two different banking associations in the same week in New York City. Um, and I'm not in banking, so I don't speak as a banking industry expert. I speak as a solutions expert within the banking sector. And it's interesting to sit within these associations in their annual conference. This is a very important time for them to come together. And as much a participant in learning and listening as they are at these events. What I heard was varied depending on the size of the bank. You have global banks that are funding countries like JP Morgan Chase, and then you have small rural community banks. So and they interestingly enough have a very important voice within the associations. And that's the one thing about American Banker and ABA that's great for the banking sector is they're all equally important when it comes to their voices. The trends are predominantly everything beyond the core, as they call it. So there's core banking software. There are major players within the core banking software, but the speed at which fintech is moving within the banking segment has outpaced most of the cores. It's outpaced the capabilities of banks and their infrastructure. And I'm speaking generally here that there's an adoption rate that banks need to start having with fintech itself. Instead of competing against fintech, maybe it's an acquisition of fintech. Instead of competing against fintech, maybe it's an API connector into fintech. So where I think you're starting to see, where you saw high competition, certainly throughout COVID, where it was the branch closures and the branch, or other, and the online fintech world exploded. I think now you're going to see over the next couple of years where there's an emergence of interconnectedness with fintech into the banking sectors, and this will help to serve the constituents of the banks, interconnect the banks, certainly with FedNow as a digital payment platform, instant digital payment platform that's going to interconnect. But I think a marriage of technologies will ultimately play into the future of banking, from customer communication management to customer onboarding to payment platforms to online banking to mobile banking to core banking software. These will all be very interconnected in an ecosystem that is an open platform, allowing for a much more connected world with fintech and banks within the core.
So you kind of see both of these. You see the world just kind of blending together rather than competing with each other, which is really
It's
interesting.
exactly right. And the at the end of the day, there's a part of the bank that's institutional for the bigger banks. I mean, they're funding countries, right? But the majority of the banks here in the United States are focused towards consumers like you and I, selling products and services to consumers like we are. And we now are, they're seeing the competition from the mobile, from all the different fintechs like Zelle and Cash App. And I don't want to give them too much credit on the naming front, So what they want to do is have an open payment platform that allows you to pay how you want to pay instead of what's available, the Zells of the world. So I think you're going to see a much more open, dynamic platforming happening here year over years and less competition.
Sure. Yeah. And in terms of like, cut, you were kind of mentioning consumer banking right there. What role does technology play in kind of enhancing the customer experience as banks are kind of merging with fintech apps? I know you kind of went into it a little bit there, but is there anything specific?
Well, I think there are specifics. Some of them are certainly Troy technologies that I'll talk a little bit about. But I think instead of me telling you, about us, I'll tell you what you're seeing out in the world. I mean, Capital One has grown their cafes. I think they're in the 80 to 90 cafes now, which is a much more open concept of coffee and banking, but it's also banking where you can get some banking done. You have private rooms as a customer. You have reduced costs on a cup of coffee, and it's I'm a Capital One customer and I'm a J.P. Morgan customer, so I don't want to alienate. And all the banks are great, but this concept is definitely grabbing a foothold. It's very unique for Capital One. You see. Uh, Banks opening up branches with no people. Bank of America is testing that in multiple locations throughout the U.S. And then you have smaller banks and even larger banks that say, we're not going to go that route. We think the person, the banker, is very important to this idea. The brick and mortar, is a cornerstone of communities and cities around the world. So we're going to stay that route. Where I think technology needs to merge with this vision of either whether it's a cafe or no staff or staff is we all want things quickly, especially again back to that mobile idea that you can do things very quickly. And we are becoming very accustomed to self-service. We self-service our menus at restaurants, we self-service parking, we self-service movie tickets, we self-service many of the applications in the past that were staffed by people. So I think the consumer is now ready for self-servicing their banking with maybe some support depending on the complexity of the transaction. And I think the adoption of banks to move beyond the ATM, and ATMs are our friends for Troy, but you have to move beyond the ATM. And the ATM, I think the future of ATMing is going to be banking. And I don't know that the bank branch will look the same way. The bank branch footprint will look the same way as it does today. In 5 years, it may not be a branch at all. It may be a hub, and there's banking hubs and other parts to that hub beyond banking where they merge different types of transactions. Could be government transactions, could be healthcare transactions, where the banks start to incorporate other industries into the branch to bring better value back to the consumer.
Yeah, that's really interesting. I mean, it definitely aligns with things I've been researching as well. With consumers kind of being stranded in these banking deserts. Without any branches being close to their area where they live. We're seeing over 1,600 branches a year close since 2018. Um, you're talking about self-service a lot, and how ATMs can transform, like, so in terms of how they transform is kind of merging, banking services that you would get from a person when you go to a physical branch into a self-service hub is what you're saying.
I think it is what I'm saying. So what I think happened, and this is well documented during COVID. Clearly, the branches were closed. We weren't going into branches. People were banking online. The online banking explosion happened. The people were banking more online or becoming online bankers at a rate that we had never seen over the previous 10 years. But what happened also during COVID is we saw some of the ATM manufacturers coming out of COVID run into some problems. It's again well documented. Diebold went into bankruptcy. NCR split into two different companies. And when those two things happened, I'd imagine that that innovation kind of takes a little bit of a back seat. So we're not seeing the ATM manufacturers meet the needs of the banks fast enough, because when we walk up to an ATM, for most consumers, it's I need some cash, or I need a deposit. Maybe I need deposit cash, but generally the optical reading of your phone is now your check deposit vehicle. So it really stops there. And some of the small business banking that would happen typically at the branch is now happening at the location, at the retail location. So the importance of the ATM, as fundamental as it's been to all of our lives in the innovation of banking, it's becoming less important. So banks need to find a way to turn that idea that this terminal that we've grown so accustomed to over time really can service the needs and my needs today and my needs in the future. And that's really where the innovation of the Teller Central is coming out with Troy, which is really it's a consumer and banking led solution that really solves the problem that ATM manufacturers haven't solved to date.
Right. It's merging the two worlds of, letting customers, it's really helping the banks and the customers, but giving the customers the option to, print things like checks, without going into a bank, or bank cards, deposit slips, other things like that. Um, and in terms of smaller banks kind of face unique challenges, compared to the larger institutions. So how, can they leverage the same technology and innovation and also remain competitive?
We have a great use case on that, Nate. And thanks for asking. So really what we did was we kind of scraped all the teller applications and banking applications that happen within a branch, and not just a metro branch but a rural branch, and said, how much of this can we transition to a terminal? I'll call it a terminal. Looks exactly like an ATM, actually has more functionality and easier to use than an ATM, as much as those buttons are serial and radial. Um, and we have shifted all of that over to Teller Central, from card issuance to account opening to signing the documents that you need a wet signature on to be able to scan them back into the device. Like you said, cashier's checks, teller checks, certified checks, money orders, all of this can be available on Teller Central. Whether you're a big bank or a small bank, it really doesn't matter. This is really about scale. The advantage of smaller banks, and we have the use case, as I mentioned, in with a customer in California. I won't name them because we're still in the works. It has a couple of locations, but they want a competitive differentiation. So they're looking at placing a Teller Central unit within the Chamber of Commerce, where they already have an ATM machine, and to have their banking solution there at the Chamber of Commerce for all of the town to be able to use this as their banking hub. And it really is quite a unique differentiator. So people are generally in the town, the central part of this town, and they're only looking for a couple of devices. But when they look at their ATM and what real value that brings today system, they're seeing that there's a marriage of both technologies that should be made available to their consumers. So maybe at the branch it's one of one, one ATM, one Teller Central. At the Chamber of Commerce, it's a Teller Central. Maybe even at the airport, they're talking about it, putting a Teller Central there. This is about flexibility. They want to be a flexible bank. They want to be able to have their customers walk up to the device, maybe scan their bill, and it scans in the payee, and they can just press the button, and after they've authenticated, and they can pay the bill. So if they had a couple of bills, they just want to pay. That's a very easy thing to do with reading a QR code. So the 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 landscape is limitless as far as the capability of Teller Central, and there's no bank, big or small, that shouldn't be looking at this as an alternative to their ATM strategy or a complement to their ATM strategy.
Yeah, absolutely. I mean, it's kind of, we've said it before, kind of that branch in a box type of feel.
Right.
Kind of gives you all those services as well as cash dispensing. But I did notice that you were just talking a little bit about, the marriage of ATM and Teller Central at the same time. Do you see Teller Central as being kind of an absolute replacement for ATMs, down the line, or is it always going to, they're always going to work in tandem with each other?
It's a great question. Again, these are good questions. You've thought these out. So this technology exists. It's very for in Latin America for the last 10 plus years. This technology exists in the Middle East for the last 10 plus years, where you have a full ATM, you have cash recycling, and then you have the full capabilities of most everything I mentioned: cashier's check, teller checks, account opening documents, where you're actually taking like real collateralized documents, signing them and scanning them back in. Card issuance. This exists in everywhere outside of the world except for North America. So we've been a little bit slow to adopt these type of technologies here in the U.S., and I think that has to do maybe with the ATM investment. Um, do we have the potential and capability to have full ATM, cash recycling, and the banking hub branch in a box available? The answer is yes. Is the consumer ready for it? Maybe. I think the consumers will dictate, how much of this they want and how much of the banker, the touch and feel relationship that they want to maintain. I think it probably depends on what area of the country you're in. I think if you might be out in a rural environment, people have a little bit different of a disposition to take some time and have a cup of coffee with their banker. If you're running in New York, it's a New York minute, so they just want to press and go. So I think whether it's geographical, regional, or technology driven, depending on the innovation level of the bank, I think the adoption rate of the consumer is really going to dictate how it's into one world.
Yeah, absolutely. That's really interesting that we're just, there's not many of these machines that can do this,
No.
in the U.S. I want to talk about, speaking of ATMs, I want to talk about check fraud a little bit. I'm assuming there was probably, talks at the ABA conference about check fraud because of how great of a problem it is. Um, and recently, there's a story in the news. There's a trend in the news of check fraud being done through ATM machines. It was, Chase Bank had an issue. It was called the Chase Bank ATM glitch, where people were depositing checks and withdrawing the money, before the check cleared, and they were able to do it, without question. It was being spread over social media, and Troy being a company that specializes in preventing check fraud, how could the Teller Central machine kind of merge the two worlds of preventing something like check fraud through the print through printing checks and also kind of innovating ATM services?
So I thought you were going to bring up the Georgia just conducted the Banking Association of Georgia in conjunction with the ABA did a study on check fraud and found that 80% of most check fraud in this country is impacting small business. And that's a real concern that we should all consider, because small businesses are, they're mom and pop type organizations that are putting their life into the work that they do, and they don't, they sometimes struggle to make payroll. Some of them thrive, but generally speaking, these are the kind of companies that are spending a lot of their energy and finances to keep afloat. And check fraud can close a company. So we take it very serious, fraud in general. That's especially when it's check related. Some of this has to do with governmental regulations and the fact that when you deposit a check, a certain amount of it has to be made available within a certain amount of time. Being able to get that check in their hands, meaning into the bank's hands as quickly as possible, to see if it's an actual check and whether it's if it's been frauded. I think that's something that could actually even happen in the optical level. So we are working with the different banking associations across the country. Certainly, we provide the most advanced fraud protection on checks. This is a well-known fact across the country. We're the only company that prevents check washing. And check washing is the one way in which checks are frauded typically. And their ability to fraud the check then puts them in a position to deposit the check. And once they're able to deposit the check at a significant level, and there's not a positive pay, which that's the other kind of trigger in this, is positive pay is the other part of this that really connects the original check to the actual check to make sure that those two marry together to prevent the fraud from happening. If you don't have positive pay, enact positive pay immediately. This is critical. And if you don't have check washing prevention and you know that it's at the toner level, enact toner, the implementation of toner fraud protection, so that your check can't be washed and then deposited and then frauded, obviously.
Right.
And this is, by the way, these are billions and billions of dollars that are being frauded. It's happening at the U.S. Post box, at the blue U.S. Postal Service devices, because the arrow keys have been stolen or they're being sold. I thought you were going to bring up the Wall Street Journal. There was a Wall Street Journal article. I don't know if it was the 20th of November, but check fraud is on the rise but so is digital fraud. I mean, you look at cybersecurity, cyber fraud, and digital fraud, because fraudsters are getting smarter and smarter, and banking is not spending probably enough time on the fraud aspect, consumers are bearing the brunt of the fraud. Let's be frank about this. Banks don't pay more money for the fraud; consumers do. And I'm not saying that banks don't um, uh, absorb some of the fraud costs, but ultimately there is fraud in all the fees that we pay. If fraud were eliminated, we may have less fees. So, but it's a matter of time. You know, how much time can you spend towards fraud, and how much do you accept? But working with Troy, we're focused not only at the substrate level, at the check stock level, at the ink level or toner level, to make sure that that can't be washed, and then also implementing software solutions that allow for you to register the check and the amount of the check that can be that you can validate whether that's the actual check value that was originally implemented.
Yeah, absolutely. And I did just read that Wall Street Journal article is very interesting.
Yes.
Just how much check fraud's going on right now and how it's kind of ramping up. Can you believe we're still talking about check fraud in 2024? And the answer is, obviously we can still believe it. We hear about it all the time, and we're helping businesses and banks overcome check fraud all the time here at Troy, like you just mentioned. Ari, I want to thank you so much for joining. I don't know if that's all my questions. If you have anything you want to end with.
I would say this because you made a couple of points there. I think I wouldn't want to just kind of leave open, which is check fraud does exist because we still use checks in this country. This country at one point, I can't remember what the number, whether it was 40 billion checks. We're now clearing 4 billion checks. So we still use 4 billion checks annually. Might be a little bit less in 2024, but we clear every single check you write gets cleared by the federal government. So we about $4 billion. The value of the check has risen. I think it's 30% in the last 3 years. So it's a high value instrument that we're utilizing, and it's a requirement in our lives here, in the U.S. So checks aren't going away, not at 4 billion or 3.8 billion or 3.7 billion. They're still an important facet of our lives. This is a cultural thing that we've grown accustomed to. Whether it's and I'm still a checkbook user. I don't think my 3.5-year-old is going to be using a checkbook when he grows up, but my older son does have a checkbook. We're here to make sure that whatever instrument you're using, whether it's digital or paper, that we're here to protect the consumer and the banks from fraud. Fraud is becoming a very sophisticated. It's become more and more sophisticated. Who would have thought that the U.S. Postal Service workers would be selling the arrow keys to the blue boxes, and they'd be using all of the mail and going through every mail, just finding the check and then washing the check and then depositing it. So they're here to stay, is my point. There's such a high amount of usage. Checks shouldn't be considered as unnecessary, because they are necessary. Digital payments have their own fraud. I've had a lot of fraud in my own personal life on credit cards and in my bank through digital issues on the dark web and all of these different places where your private information goes. We're going to make sure that the paper check is the most secure for consumers and for the industry. We've proven to do that. Typically, when you're using a Troy technology, it's not fraud proof, but it's the most fraud resistant technology that's available. So we'll continue to focus on that as time passes by.
Absolutely. And you can learn about all of our other security technologies on our website, www.troygroup.com. Ari, I want to thank you again so much for joining me and taking the time to give us your 2 cents on the future of banking. I want to thank everyone who joined or watched. If you want to follow Ari on LinkedIn, you can scan that QR code up there in the corner, and it'll take you right to his profile. You can watch the replay of this on YouTube and LinkedIn, and be on the lookout for more of these talks throughout the year and into 2025. Thank you so much, and we'll see you next time.
Thanks,
Goodbye.
Nate. It was very nice